And Indian digital payments provider Paytm got off to a shaky start with its debut on the Bombay Stock Exchange. Shares finished their first day of trading down 27% as investors worried about the company's ability to earn profits. Despite these jitters, it's India's biggest stock market listing to date and could help Paytm expand into a global payments provider. Radhika Bajaj spoke to Paytm President and Chief Financial Officer after the company's listing.
Your company has raised a large amount of cash. Where do you intend to use it?
We are going to invest a chunk of this money into growing our payments network, which is really about growing consumers and making their experience better, growing merchants and giving them more technology, and overall spending money on our payments technology platforms that it can handle more scale, it can handle more innovation, and so on. We're going to spend a chunk of money in new business initiatives, such as, and those could be organic, and those could also be inorganic. So we're going to spend a chunk of money in that. And then the rest of it, we have to sort of get ourselves some flexibility with respect to what the environment would be.
There are concerns that there is no clear path to profitability. How do you plan to keep the investors happy in that case?
I don't think I see that as much as a challenge to profitability. It's what stage of the journey you're in. Most companies, especially most internet companies and technology companies, they're unprofitable before they're profitable, and hopefully at some point they become massively profitable. So that's the journey, and that's the stage of journey we are in. As I said, until a couple of years ago, we were in this very heavy investment phase. A couple of years ago, we started to get into a more efficient investment phase, and I'm sure over time we'll continue to do well.
Now, there are many digital payment providers now as opposed to, say, 10 years ago. Some are backed by the government. How will Paytm maintain its unique proposition?
I think we differentiate ourselves by being a comprehensive payment solution for consumers and merchants. So our experience is that consumers don't want to use one payment instrument. And philosophically, the way we think about this is if we choose to do one thing, then we are trying to design the user experience around the thing that we have chosen to do. If we say that let the users decide what is the best experience for them, and we just have to find a way to provide that, then that's a better business model long term. So that's why we provide a comprehensive set of payment solutions to consumers and merchants. Obviously, consumers to be able to make payments and merchants to be able to accept them. And that's really the differentiator, right? So our business model, we think, is much higher retention, much higher stickiness, much higher monetization.